In investing, what is comfortable is rarely profitable. Robert Arnott. This quote speaks volumes for traders. We often want to find certainty, a clear path that's comfortable and easy to follow. But the most profitable trades are often the ones that are a little uncomfortable, the trades that require patience, discipline, and reacting to price action as it unfolds. The failed breakdown is one of those trades that demands a keen eye for price action, and today, we're going to talk about why it's one of the most reliable setups you can trade. Let's dive into what's been happening with the market. The last week, ES was stuck inside a massive range. The market closed around 6,020, with the key support between 5,978 and the resistance up at 6,081. The market had been showing a lot of chop due to ongoing geopolitical tensions, and Middle East headlines dominated the sentiment. But as traders, we can't trade headlines. We need to trade the price. So, what's been happening with the price? Price action told a different story. Price didn't just react to headlines, it reacted to the institution's footprints. And this is where we saw a perfect example of the failed breakdown setup. As always, institutions use headlines to flush prices down to key support levels. These dips cause the market to sell off and trap short sellers. Then, once the support holds, institutions step in and accumulate their positions, causing a sharp recovery. This is exactly what happened over the weekend. Last Friday, we closed at 6,020, and ES was stuck in that massive range between 5,978 and 6,081 resistance. Over the weekend, geopolitical tensions escalated, causing a sharp dip in the market. But we knew exactly what to do. As the market flushed below 5,978, the key level for us was to look for a failed breakdown, which had an over 90% win rate. On Sunday, the market flushed below 5,978, and we saw a huge bounce. This was exactly the setup we were waiting for. By Monday, we had moved all the way to 6,143, which was a huge leg up for anyone trading this setup. The failed breakdown gave us a clear entry point, and we saw price move significantly higher. It's crucial to understand that in trading, it's not always about catching every single move. Sometimes, it's about waiting for the right setup and being patient for the price to tell you when it's time to enter. When you trade a failed breakdown, you're trading with the market's natural flow. Patience is your ally. Don't get caught up in the need to trade every little fluctuation. Instead, focus on the key setups, like the failed breakdown, that have been proven to deliver consistent results. Remember, the trend is your friend, and sticking to a proven strategy like failed breakdowns will guarantee long-term success. Trust the process and stay patient. The more you follow the system, the more you'll see your portfolio grow. Now, if you're ready to take your trading to the next level, it's time to join the ES Game Plan and gain access to exclusive trade ideas, real-time alerts, and trade setups, just like the ones we discussed today. Join our Discord community, where you can connect with like-minded traders, share ideas, and stay updated with live market conditions. The ES Game Plan will give you the edge you need to trade successfully, and the Discord community will provide you with support and guidance every step of the way. Sign up today and start trading with confidence.